What's going on, guys, and welcome back to the Young Financials channel. Before I start this video, I just want to briefly state that I'm not a financial advisor or expert and that this video is made specifically for educational purposes only. So let's get right into this. So today's topic is going to be what stocks to invest in 2020. 2019 was an insane year for stocks. The S&P ended up 35% up for the year, which is absolutely insane considering the fact that its average is usually around 8 to 10%. So that begs the question, what stocks should you invest in? Should you invest in high growth, dividend yielding stocks? Like what would be good to invest in 2020? Like, are people expecting a bigger move? Typically, after the market does a really big year, it starts to slow down and it kind of comes back to earth a little bit. And you know the phrase, everyone's like to the moon. But that's kind of where I feel the market is at right now. It is melting up. It has been melting up for the past couple months. And I honestly was thinking about shorting it a while ago, but I just don't really have the balls to do that just because it is just going up and up and up. And I mean, I'm not trying to bleed money. So, so what I'm really looking for right now, and this is just my opinion, is I'm not 100% sure if I want to stay in a lot of these high risk, high growth stocks. So you look at the high growth stocks. Facebook is one of them. Boeing, Tesla, Wynn Resorts is a pretty high growth stock. It's not super high growth, but it's higher growth than a lot of those. AMD is a high growth stock. I just don't necessarily think, and this is my opinion, I don't really think that those are going to be the best to invest in 2020. I personally do think that there is going to be sort of a slowdown, not maybe a little bit on the jobs market and that kind of stuff, and maybe spending and consumer confidence and stuff. I think it's going to kind of go down a little bit. I don't necessarily think it's going to go negative at all. I think we're not going to see as high of numbers in GDP growth and all that kind of stuff for the next 4 quarters or for 2020, in my personal opinion. I just don't think that, I think that it's already priced in. If we are going to get higher numbers, I do think the market could climb higher. However, I think that the market has already priced in all that good news. And I think that a lot of this is riding on the back of interest rates going down. Now that they're going to keep they've said that they're going to keep interest rates the same for now and just kind of see where everything goes. And the whole thing with the trade deal, sorry for that 20%. And I personally just think that everything's already priced in, and unless something else comes out, the markets probably aren't going to do a whole lot. I think they'll probably go up maybe another, I think this might be a 4 to 10% year. I don't know. I know that's kind of a bigger gap, but it's just so hard to tell. I mean, you can't really tell. This could be a down year for all I know. So I think the main stocks that you're going to want to invest in 2020 are probably going to be dividend or value stocks. I don't really see high growth. Now, I think that Facebook is going to be a good stock to invest in. I think Microsoft is going to be. I think Boeing is a good pick as well. I know you shouldn't look at graphs, but if you look at the graph for Boeing over the last 3 years, it's weak. So if you look at this, you can tell that it kind of goes up, and right now it's at a low point. So if you look throughout 2018 to 2020, and I know you shouldn't really go off of past performance and everything, but I kind of do when it comes to like higher stock or higher cap companies, just because they're more consistent. If you go off of like AMD, it's like a stock like AMD. It's more high risk because it doesn't really have a specific pattern. So obviously this could break to the downside, but it's a lot less likely to do that than a lower risk or a low cap stock. Excuse me. So basically, I would say that Boeing would be a good stock, Facebook would be a good stock, Microsoft would be a good stock. Stocks that I would probably try to stay away from are ones with high PE ratios, which is price to earnings. So stocks like AMD has a 230 PE ratio. Other stocks that I would probably try to stay away from are ones that are high growth, but they also have not a lot of cash or stuff on their balance sheet. I don't think that there's going to be a crash in 2020. However, it could literally happen anytime. So I would just kind of play very defensive in 2020. I don't think that it's in your best interest to try to be greedy at this point, considering the fact that the markets are already melted up. Right now, I have about 35 to 40% of my net worth in cash. So I have around, like I said, 23,000 now in cash, and around 32,000 in the market on this account, plus maybe another 5 in another investment account, I think on E-Trade. But that I'm not really doing a whole lot with that. I think that's just the S&P and just a Vanguard fund. But so yeah, I'm thinking that defensively and dividend stocks are probably going to be your best bet. Good dividend stocks would be, one is definitely Carnival. I love Carnival. It has a 4% dividend yield. So that means that you're getting about 50 cents a quarter, which is, I absolutely love that. Another one is, 50 cents a quarter per share, I should say, in case people don't know what that is. What a dividend stock is they basically are paying you to own their stock. So you're getting in kind of on their profits. So they'll pay you out a 4% dividend yield of whatever their stock price is for that. And typically they have a set price. Usually, I think the last quarter they paid out a 50-cent dividend yield per quarter. So there's obviously 4 quarters in a year, and they pay out 50 cents each quarter that you own that. And then they have the ex-dividend date, they have the date that they pay you, and all that kind of stuff. So I'll get into dividends in a later video if you guys want to see that, if you really don't understand what it is, but I'm assuming most people do. Another stock that is very good for dividends is Wynn Resorts, and they give it a 2.83% dividend yield, which is very good. That's about $1 per share. So I have 70 shares. That means I'll get $70 next quarter, and then the quarter after that. So in all, I'll get another $1, and then essentially every year I'll be getting $4 per share, which is around 280. I can do math. $280 per share. So really, to recap, I just would, in my opinion, now, you don't have to do this. I'm not telling you to be defensive, but personally, I'm going to play defensively. I'm most likely going to sell out of these iRobots if I can get them up. I really would like iRobot to get to $60, and that's where I would probably sell. I'm probably not going to sell until then. It has been dropping. Actually, let's see on iRobot. Let's see where my... let's get back to the... let's go to the 6 month. Okay, so my average is 46.83. Okay, so I would say I probably won't buy any more iRobot unless it gets below that. So it actually could get below that tomorrow if it does. Actually, it almost did. It did get below that today, didn't it? Yeah, it did. Wow. So if it gets below that, I'll probably start averaging again, just because I do think that that's going to be another run. And I really think the only reason that it went down was because of the tariffs. It got hit hard by the tariffs. They had to pay an extra 25 to 30% for everything every time they sold a vacuum, they had to pay an extra 25 to 30%. So that was just eating away at their profit margin for the longest time. So, and I think Boeing I might buy some more of if it gets lower. Now, I'm not going to raise my cost average because I'm probably not going to do that on any of these stocks just because I don't have huge confidence on them, like I said, going into 2020. But I think the ones that I may buy more of coming soon are Carnival, if it goes below, iRobot, and probably Boeing. The ones that I'm definitely going to stay away from are Wynn. I'm going to stay away from Wynn. I'm not buying any AMD. I did trade that today, like I said. And I do have 2 calls going into tomorrow, as you can see, and they expire on the 10th of January. They're $50 calls. But yeah, like I said, I'm going to be playing defensively, and I wouldn't be surprised if the market melted up another 10% within the next couple months, just because of the Christmas rally and Santa Claus rally and all that. But we'll have to see how it goes. It just matters now. Now we have all this stuff with Iran, but you know how the markets are. They digest one thing. It's all about digestion with the markets. They have to understand the prices, and once it gets digested and people see that, oh, wow, I personally don't think this whole Iran thing is going to be a huge deal. Just like every other thing, just like the whole thing with the tariffs, everyone was like, oh, we're going to get a crash in 2019, and look what happened. We didn't. But yeah, so guys, that's going to wrap up this video. I just wanted to let you guys in on what I plan on doing. You definitely do not have to do this, like I said, but I'm just trying to give everyone some advice out there. So guys, thank you for watching, and have a great day.